So guys, we just had earnings. Is NIO stock a buy or a sell? The earnings are kind of a mixed bag, to be honest. And there are reasons to buy and there are reasons to sell. So in this video, I'll be presenting both cases, both sides of the argument. First, let's start with the reasons to buy NIO stock. The biggest reason to buy NIO stock is, of course, number one, they confirmed that there is no necessary need for further dilution. So despite the big losses of 700 million in that quarter, they said they don't really need to do any more dilution according to the market. So they will see, according to the market, maybe if the stock price flies super high, they might perhaps do a little bit of dilution. But other than that, there's no need for further dilution. That's very comforting, all right, to know. But number two, the most important reason is, of course, the fact that they said in 2026 they're going to target profitability. Okay, they're going to be profitable in 2026, and I think this really tests the patience of investors. Okay, are you going to be patient enough to hold up until NIO reaches that profitability? It's just 2 years, all right, in 2 years. So do you have the patience to wait 2 years and perhaps potentially see massive returns on your investment? Potentially, okay? Profitability is not guaranteed, but it is very likely to happen, and they're moving towards it thanks to also improving margins. So they confirmed that in Q4, NIO's margins will be at 15%. In 2025, NIO's margins will be at 20%. So margins are going to get better and better, and of course, you need 20% plus margins to become profitable, and they're definitely heading in the right direction, which is very, very nice. And Onvo is also increasing their margins gradually from right now in the single digits because production hasn't ramped up yet, and then very soon by when it gets to 20,000 per month deliveries, they're going to see 10% margins, and then gradually they're going to get to 15% margins with optimization. So we're all heading in the right track, guys. All right. So the longer term picture, we're heading in the right way. Okay. Long term, we are good. In 2 years' time, if you buy the stock now and just close your eyes, sleep for 2 years, wake up, you're gonna be good. Okay. However, all right, there's definitely a flip side. Okay, and this is not financial advice. What is the flip side argument about this? What are the reasons to sell NIO stock? Okay, and some people might get upset that I'm sharing this, but of course, NIO CEO, they talked about all the things that I am about to tell you. First of all, there are lots of Onvo cancellations due to the fact that they're not able to ramp up. So they talked about how 50 to 60% of cancellations for Onvo orders are because of the fact that they're not able to take delivery of their cars before the end of this year, where local subsidies can only be enjoyed in 2024. So in 2025, the subsidies are going to change for different cities, and people want to take advantage of that. And if you can't take delivery of the car this year, then they're going to miss out on it. So they have a license plate. They want to take delivery of the car right now. And if they can't take delivery of their Onvo, they're going to go with something else. Simple as that. No other further reason, all right? Whether it's a Xiaomi or maybe an Xpeng or whatever car they want to go for, they're going to go with whatever they can take delivery with by the end of this year. So this is why ramping up is so important, okay? Ramping up production is so important. So there are cancellations, okay? Keep that in mind. Keep that in mind. Okay, so really they gotta pump out those numbers for Onvo, but also the SG&A costs and R&D costs, which were massive expenses, all right, in Q3, they are actually going to increase in Q4, according to the CEO, because they have some seasonal R&D spending, maybe more cars being approved. They have a bunch of NT 3.0 cars that are in the later stages of development. They also have the Alps car, the Firefly car in the later stages of development. So there's going to be increased in R&D spending compared to Q3, according to the CEO, okay? And also SG&A. SG&A costs are also going to increase in Q4, according to the CEO, because they're expanding stores, they're building more stores from 190 Onvo stores to 300 and eventually to 1,000 Onvo stores. So SG&A costs are going to increase. What does that mean? That means R&D and SG&A costs will be larger in Q4 than in Q3. That could mean that even though in Q4 we'll see very good margins, all right, for Q4 earnings, we'll see very good margins, we might see even bigger losses, okay? Okay? And that could definitely hurt NIO stock. If, like Q3, we saw 700 million in losses. Imagine if that's 800 or 900 or even a billion, okay? Not to spread fear or anything, but you know, when they say SG&A costs and R&D costs are going to go up compared to Q3, you got to take that seriously, right? So that does mean there could potentially be further downward pressure on NIO stock going forward because of all this money that they got to spend, okay? So they got to spend a lot of money on that as well. And another very big potential thing that we might see going forward is a fall in NIO's deliveries, okay? And this isn't something too surprising, to be honest. It's the fact that with NIO's future vehicles, third-gen platform, they're going to make the cars more expensive, okay, with the ET9, ES8, and all those expensive cars. And they're, according to people in the know, they are removing the ET5 and ES6 and basically making room for Onvo. So Onvo is going to take over that price category, and NIO will be focused on an ultra-premium, luxury, high-margin market, okay? So in that sense, you know, if the cars are more expensive, higher margins, but they might potentially sell less cars, especially if their top sellers, ES6 and ET5, don't get refreshed to the NT 3.0 generation. And they just end that lineup of cars and just say, hey, if you want something like this, go buy an Onvo. Go buy an Onvo L70 or L80. And those two cars will probably be very good sellers because the L70, L80 will be big 5-seater SUV and then a big 6 or 7-seater SUV. And that, of course, will be in conflict with the ES6 at that price category. So it makes sense for them to sort of back off with the ES6 and ET5. But that does mean NIO's deliveries in the future might slide down, whereas Onvo overtakes NIO, and that's to be expected. And then also with further costs related with Firefly, you know, when they launch Firefly, you got to remember, even though they don't have to build new stores, so you're not going to see massive SG&A costs with Firefly because they can just put the Firefly car in the NIO showrooms. They're going to be sold alongside NIO vehicles. Thank God for that. But they have to build their own swap station. It's a smaller swap station. It's half the price of NIO's current swap stations, but they still have to build that out. So a new swap station also means like more cost. And if they want to have a good big network of swap stations, then they have to put in a lot of money for that as well. So in 2025, you're definitely going to see NIO spend a lot of money, okay? You're definitely spending a lot of money. But 2025 is also going to be the year of good sales growth, 100% year-over-year sales growth. And in 2026, this is when you reap the rewards, okay? So CEO is very confident in 100% sales growth in 2025. 2026, this is when we reap the rewards. So short term, we might see more further downside, but long term, by 2026 and in 2026, we are good. We are good. All right. So that's the big takeaway message. Short term, we might see more downward pressure. Long term, 2026, no later than 2027. That is when we reap the fruits of our success. As always, stay safe, stay healthy. Peace out.